Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update. And this update is for Valentine's Day, February 14th, 2019. Just getting on to 2:50 p.m. Central Standard Time. Happy Valentine's Day, all. Well, it's an interesting day. The stock market pretty close to unchanged. It appears that Congress has approved the bill that they're sending to the president that includes $1.37 billion for the border barrier, I don't know what you call it, and the president is going to declare supposedly a state of national emergency for the rest of the funds. Maybe he can't find what he needs elsewhere. I'm surprised he's going that route, but it appears that that's the case. Next thing, the other elephant that we have to deal with, of course, is going to be what's going on with China. And as you can see in the grain markets, they're down pretty hard. So if grains are any indicator, it shows you that there's no trade deal about to happen tomorrow or by March 1st. I think that's what took the air out of this market in a large way. I could argue that, the energy's held up pretty good, and I think you could argue that that's a good part. And I could also say that the dollar is down a fraction while the euro's up. And when the dollar got up to 97.12, markets as a whole were in trouble. They reversed, and the whole market reversed with it. As you can see in the weekly area chart of closes, we're down 11 cents for the week going into Friday. The market is still over the 18-week moving average of closes, and that is a zone that if we get down there, I'd expect to see the market try to hold. When we go to the daily chart, you can see how this market is sort of rolled over, and when you put the swing line on it, you got the lower highs, the lower lows. So the market's in a downtrend if you believe that a trend is defined by a pattern, and that pattern would be in a downtrend, lower highs, lower lows. The market fought a battle at the 18-day average of closes, what I call this line in the sand, and it's breaking away from it. One of the next support zones could be the 100-day average, and you always look where the Bollinger Band is, and you went right there today. And if you take a look at where you finished, you're under it. The Bollinger Band's 919, you close 917 3/4, so you're pretty close. So let's assume the market extends the break a little bit. Could be right into that area of 914 3/4. Let's assume you get a rally out of nowhere and the market pops. I would expect to see resistance at 930 1/4, and if you get over 934 1/4, it negates this leg of the downtrend. When you come to momentum, you're oversold. So I have a market that's oversold in a downtrend, hit the first target with a secondary target at 914 3/4. In the meal market, you failed again against the 18-day average of closes. Now, one of the interesting things, and you'll notice I'm in the May contracts now, is when you lost the embedded reading, it put into play the 18-day average as unlikely events where the market and price, moving average and price try to come together via the lost momentum. You went up yesterday, challenged that. For good measure, you went slightly through it today, and then whack, right back into the down leg. So now what you have is a pattern of a higher high, a lower low, a downside target potential, doesn't mean it has to get it, of the lower Bollinger Band of 308.60, and you're oversold already. In soybean oil, you've come down the past 2 days hitting this 18-day average of closes. Will this market unwind itself and take it further down into this area of support of the Bollinger Band and 100-day average? It could. It doesn't have to. It could play up here for a little bit as it unwinds spreads of meal, oil, and soybeans, called a crush spread. In the corn market, the trend is down. Lower highs, certainly lower lows, momentum trying right now to confirm it wants to turn down. First support 381 1/2. So this market's got itself in trouble, as does the wheat market. Yesterday's rally in wheat I just didn't get. I was trying to read the fundamentals behind it after the market, and people are talking cold weather, bad areas in the Dakotas, Minnesota. I don't think that's what did it, but I don't know what did it. All of a sudden you're down 15.5 cents today, but you are oversold. You extended the lower Bollinger Band. You only stay under that number about 5% of the time. It can extend further, but it's probably an area where you could get bounces from. That doesn't mean you have a trend yet. You don't. You have a market that's whipping between the upper Bollinger Band and lower Bollinger Band. In the sugar market, I can't say how often this market keeps failing against the 18-day average of closes, the red line, gets to the lower Bollinger Band and seems to be able to bounce back up there. Resistance back into the 1276, 1281 level. You'd have to get over 1277 to negate the downtrend, but you have hit a downside target in the lower Bollinger Band. And as you tried to approach it before, as you can see, you seem to find bounces away from that. Coffee market, still catching traders. You know, a lot of people were playing that coffee could be in trouble from the warm weather that had hit Brazil, but now as we're getting, in fact, it was too wet of weather was the problem. And now they're saying, the weather's clearing up and look at how this market just let go again. Once again, we're coming out of a sideways action to the downside. There could be more life in this. When markets start doing what this is doing, hitting the band, Bollinger Band, getting away from it, coming back to it, and then plunging with it and forcing it out, it takes on a life of its own. So it's a difficult market. It is oversold, but it's trying to break out to the downside. In cocoa, we're caught in sideways action. And it just whipsaws, one day up, one day down. It's back and forth. The short-term trend, I'll argue, is up with higher lows, higher highs. It's over the 18-day average. The support has proven itself so far at the 18 and the 100-day average of closes, the green and the red. Momentum is fairly flat, which accounts, I think, for the market not able to follow through from yesterday's move in the market. In the cotton, just ugly. Here's what else can you say? This is what I was talking about in coffee. You come out of sideways action. Typically when you do it, you're oversold or overbought, depending if you're up to the top or bottom. Then you start pushing on the market, going under the band, getting back over it, and you keep pushing down on it. That is that pattern that I'm talking to you about. In the cattle market, you made another attempt at the 18-day average, held it, got back over things. You still have the pattern of higher lows and higher highs. Momentum, which had been pointing down, is trying. The word is trying to hold itself. If this market can build on it, maybe you get to the upper Bollinger Band, support the 18-day average of closes. Feeder cattle did a good job today of holding nicely. Now you've got higher lows, higher highs, two levels of resistance. 147, let's call it the 100-day average in green. And then the Bollinger Band, 147.22.5. You are overbought, so I'd be a little concerned how this market acts here. It's still overall a sideways market. And in the hog market, I think what hit this market today is the disappointment. Just like in the grain market, you know, hogs are one of those items that you hear the hog producers saying they can't wait for a Chinese deal. Maybe they'll be able to ship more pork. Two elements there. I'm going to keep talking that swine flu. People that see that everywhere, if they can afford it, they buy something else called poultry. And the second thing that you look at is this market still has problems. Now, in the terms of a downtrend. Another thing, you had lost the embedded reading. It's one of these instances where you had this one pop when you did it, but never did get to the 18-day average. I don't know if you're going to get there or not with this market. It is problematic. You know, one of the things that I offer to my people and to you is my research. Now, I write 2 reports a day. In those reports, you can get them in our mobile application. And in our mobile app, when I send them out, you get a push notification, by the way. It tells you it's there, you click it, opens right up, and you're able to read what I've put out. As you can see, it works in tablets, PCs, and the like. This is what a typical report of mine might look like. It gives you ideas as to what's going on. I will give you the specifics of the market. I will give you a buy-sell recommendation. I back it up in the morning when you get my full research package with videos and so on to show why I'm doing what I'm doing or recommending what it to be done, because you're the one doing it. That's the reality of it. And as you do that, you get to see where I'm at. Now, you can get just the commentary if you want, or the video only, you know that I've brought up that new product. How do you get this? You can call us, 866-973-2077. You can go to our website, www.iraepstein.com. Go under the word research, education. You'll see Ira's research. Choose the type you'd want. It's right there, and away you go. I'm Ira Epstein. Have a good day.